Hello and welcome to the Retail is Detail podcast with your host, Jamie Hamer. The Retail is Detail podcast focuses on technology and innovation in retail, with guests from either innovative retail tech players or retailers themselves who are adopting new technologies. We interview founders and C-suite executives from top firms who are changing the retail game for the better and delighting the end consumer. This podcast is brought to you by insurance technology firm Loxa, where I am co-founder. Loxa is on a mission to ensure the future of retail includes fair, transparent, seamless product protection for your most valuable possessions. We work with retailers to offer product protection at the point of sale or direct to customers, designing fair, transparent, easily claimable product protection with the end customer in mind, which is at the heart of everything we do. We've got another brilliant guest for you on the show today. Let's get started. Hello and welcome to the Retail is Detail podcast. I'm here with Bingham-Walker, who is the CEO of Anansi, an insurtech focused on shipping and logistics protection for retailers. Welcome, Megan.
Welcome. Well, thanks, Jamie, for the invitation. It's really good to be here today.
Awesome. Megan, you have a fascinating background. So you've advised the UK government on energy policy as private secretary to the Secretary of Trade. You've worked in venture capital with your HEB partners, and you founded a machine learning startup all before Anansi. Can you tell me a little bit about that journey and what prompted you, what learnings you had along the way that have helped with the founding of an insurtech?
I think ultimately insurtech is really all around data. And I think data is the thing that has sort of unified all of the experiences I've had in the various different sectors. So, how I came to found Anansi is that originally I actually had an e-commerce sort of side project. And that was really where I came across sort of the fact that you have such connection in the industry, that you have tools, when you set up your Amazon store, your Shopify store, to automate a lot of the processes. And you can really be running a multinational corporation effectively with a very low kind of headcount. And what I noticed there is that really insurance was really the missing link. There wasn't, a very easy way to find out about what insurance you needed or get the insurance or file claims. You still needed to kind of go back to the dark ages to fill in PDF forms and transfer a lot of data that, you were already sharing with various tools. So that was really kind of the genesis of the idea for Anansi. And it was really in the context of the machine learning startup that I was, working in, that I kind of came across the insurance industry. So that was around the same time, and sort of saw how, the insurance industry is trying to bring more enriched data and continuous data into the products. And really putting those two things together was how I came to the, original concept for Anansi, really. But, similarly working in venture capital, the businesses that I was working with were really in the industrial efficiency space. So a lot of businesses that were using data to improve industrial processes, in fact, using technologies such as telematics to improve routing and home energy management systems. And actually quite a few insurtechs have ended up using those sorts of technologies for the various product lines. But, the one that I landed in was the shipping insurance.
So your product startup that led you here, as I understand it, was stainless steel straws called The Last Straw, which is awesome.
Yes.
And so what was your aha moment where you were like, wow, okay, insurance on this is difficult. More retailers are going to need insurance. Let's create a scalable solution.
Well, actually, it's really interesting you mentioned the straws, because stainless steel straws, what I found out are incredibly deadly. So you think that you're selling a product for homeware, eco homeware. So I was selling things like these stainless steel straws, lunch boxes, keep cups and that sort of thing. But actually a number of people have died using stainless steel straws because, they can get block airways and they're very sort of, they're obviously stainless steel. That's very different to a paper straw. And I don't think necessarily people selling those things would have imagined that the public liability implications of what they're selling, particularly if they're going down the sort of white label route. So that really led me down a rabbit hole of, oh my God, you need to have proper insurance, proper liability insurance for those products. And then, originally we were sort of looking, can we offer no insurance that kind of morphs as people change what they have in their stores. So because, you may one day not have stainless steel straws and then the liability goes down or it goes up. But then, eventually we sort of ended up in the shipping insurance space, it really is a mixture of sort of pragmatism. That was where we were able to get capacity and we had interest. And, the concept of leveraging the data to improve that process was where we saw the biggest opportunity for, building a bigger business.
Awesome. And I'm conscious we're two insurtech founders talking to each other. So I just wanted to, maybe touch on some of the basics of we're both founding businesses that need insurers to back us, that need to leverage technology, hence the combination of insurance technology, which makes an insurtech. And in fact, it's been said that insurtechs are some of the hardest businesses to build because you need the intersection of insurance capacity. So big insurers, often quite traditional, backing you. You need claims handling solutions so that someone claims they have a great experience. You need regulation from the FCA in the UK or other comparable agencies abroad. You need funding, you need customers, and you need this convergence to all come together at once. So you might call it a sort of 4 or 5-sided marketplace if you were being generous to insurtech founders. Which of those ingredients has been the hardest for Anansi?
I think it's the last one. So bringing it all together. And it was quite interesting because actually I was at an event yesterday where they said that often there's actually macro reasons why the times when insurance capacity is available is often when venture capital isn't available. And then the times when funding is available, there isn't necessarily, it's maybe a harder market to find capacity. So that's a sort of, I guess, an intrinsically difficult position that all insurtechs may find themselves in, because obviously if you don't have capacity from a larger insurance company with the balance sheet to back your products, you don't have a product. So finding capacity is always the sort of existential sort of crisis that you face. But I think also we started our journey thinking that we were going to be selling shipping insurance to small businesses, SMEs on Shopify. But where we actually have found product market fit is actually essentially embedding our insurance with the largest 3PLs and also very large retailers who are really dealing with a high volume, but maybe a relatively low severity issue. So obviously we then have a third element, which is the sales cycles to do an enterprise sales deal, as well as then the convergence with a capacity agreement, which may only be maybe 12 to 18 months initially, but you've got an 18-month to 24-month enterprise sales cycle, and then also finding the venture capital funding to back that. Since you also need a product that works, so that needs some level of resources. One thing that we didn't have to battle with that you mentioned is that we have our own claims process that's embedded as part of our solution. So the TPA side of things isn't something which is such a concern, but nonetheless, we have quite a complex tech platform and that needs to be maintained and that sort of thing. So I think, to summarize, the main issue that we found is really getting everything together at the right time. And I think we finally have got that very recently.
Very exciting. We will come back to your product market fit. We'll come back to your recent fundraise and how you're accelerating. We'll come back to your incredible claims process that delivers a 98% claims acceptance rate. But I just wanted to clarify, I know we're, again, two insurtech founders talking to each other. When we talk about embedded insurance, that's insurance that is alongside and next to our products, but we'll talk about your insurance and how you properly embed it into offerings in just a second. And a TPA, third-party administrator, someone who might handle claims as a third party on your behalf, but Anansi in this case chooses to do it themselves, which a lot of the really big insurance providers may do, or they may outsource it to a third party. Let's talk about embedded insurance. So this is a real buzzword in the insurance industry. It means, including insurance somewhere in that product journey. So you think about an Amazon where you can purchase an insurance, or it's really big in the US where you can purchase shipping insurance, where the individual user is, purchasing that insurance because they're liable for shipping. Here in Europe, the company that ships is typically liable for the insurance. So when you talk about embedding insurance in the customer journey in European retail, what does that mean?
Well, we've always at Anansi had a bit of a different take on what embedded insurance means. So we see embedded insurance as really embedding in the tech platforms. So essentially placing insurance within the tools that businesses are already using to manage other processes. So you're not having to, essentially download, another app or do something different. We want to essentially be embedded in a workflow or process that already exists. And that's really how we see embedding, rather than it just being a kind of glorified affinity product.
What exactly is Anansi's insurance and how does it embed into retailer technology?
We describe Anansi as a delivery resilience platform. So the insurance is at the core, which is where we insure shipments against loss and damage in transit. And then essentially the embedding is that we essentially have a connection or data connection to the warehouse management system, whatever tools the retailer or the third-party logistics partner is using to manage all the shipments on a day-to-day basis. And then we have a data connection to the tracking data. So we essentially are leveraging the data that already exists to essentially sort of kickstart that insurance journey. We do have a couple of other sort of pillars to our platform, which go beyond insurance.
Was the aim always to be a more holistic solution for shipping and logistics within retail, or was it just aimed at being an insurance play at first and it's evolved in that way?
Yeah, absolutely the latter. So it started off being an insurance play, and then as we started listening to our customers and sort of testing various things, feedback was that there were opportunities for us to essentially expand beyond that. So the two areas that we've expanded into are firstly invoice verification. So for the same shipments that we're insuring, we've heard from a number of our clients that some percentage, maybe 2%, 5% of those, the invoices are wrong. And it's often sort of unknown level of cost that is being taken up as a result of that. We're developing a module of our platform which enables our customers to verify the invoices they've received for those shipments against the rate cards to really assess in an automated way whether there have been any errors. And then the third string to our bow, as it were, is that we are then taking the claims data that we're processing and then enabling us to sort of play that back to our customers to see where they can essentially make some improvements to reduce the losses. So an example of that would be we may see a persistent product being damaged in transit, and that may be because of a packaging issue. So if the packaging were to be upgraded, then maybe that damage wouldn't be happening. And similarly, there are some products which seem to have persistent manufacturing issues. So if the customer can sort of see the data in that way and know where the quick wins are to address, that's a sort of a win-win for everyone, because it brings the loss rate down, can then bring the price down for them, obviously reduces the losses for our insurance partners as well.
Awesome. So this has been involved to become a much more holistic solution. When you came into this area of shipping, logistics, protection, what key finding has surprised you the most versus what you're expecting working with retailers?
I think the main thing that surprised me is just how this is a known problem, but no one's really found a way to sort of comprehensively solve it. So, we speak to retailers, day in, day out to sort of say, we try and claim what is due from the courier firms, some level of compensation. So, for example, with Every, that could be the lower of £25 in cost price if something is lost or damaged in transit. But, they may only get maybe 15% of those claims paid. So, this is something which people are sort of battling with day in, day out. Some people are looking at it as perhaps we can find a better way to file the claims that might solve the problem, or, maybe we can, I don't know, develop some automation around, the track. Maybe if we have better tracking data or the ways of people updating their addresses, that might solve the problem. But no one's really kind of gone head in to say, let's just build a better comprehensive solution with a regulated insurance product at its core, where we do have to pay the valid claims. There's not really going to be any debate around.
Yeah, absolutely. So it says on your website that you pay out 98% of claims, which is obviously a remarkable difference from the 15% you might expect from sort of courier-led insurance. So what caused you to want to bring claims in-house rather than using a third party, which is what we do, which is often easier? And what made you design an insurance that can have that high of a claims rate?
I mean, the concept for the insurance was always to have claims in-house. So essentially, I guess our overall goals of the product really were that we would leverage the data that we could already gather from the warehouse management systems, add the tracking data, and then we should be able to build pretty much as much automation as possible through that whole insurance journey. So there shouldn't really be a need for a claims TPA for the loss claims if you can leverage the data as far as possible. Obviously, what we've discovered is that there are disputes, there are going to be outliers. Some customers want to have damage covered. So there are some manual claims that we have as part of the platform. At the moment, we are dealing with those in-house. So there may be an opportunity at some point in the future to bring a TPA in to do some of those residual claims. But the driving force of the platform is to try and have as much simplicity and automation. I mean, for some of our clients, the average order value is, say, £20-25. So we don't want, there's not really a claims assessment process that is really going to be cost effective around that. It's really just, did it arrive? Did it not arrive? Or, with really having, having that sort of as much of that dealt with by the technology is definitely going to be the way to go, given the sort of values that we're talking about.
That makes sense. You want the majority of claims maybe to be automatically approved and keep it dead simple and customer friendly. And then those that are a bit more large or complicated might get a little bit more scrutiny.
Yes, exactly. So it's not really, it's more the complexity, which are, it's not that complex, even at the most complex claims, but it's just, for example, the damage, you couldn't really automate. I mean, obviously you may be able to automate in the future with some degree of sort of AI and image recognition, but you may just need some level of human verification at some point. And I guess in comparison to the alternatives, if we can bring the time for those manual claim submissions down to less than a minute, that's still going to be 5 times better than the next best current alternative.
Yeah, awesome. Very cool. It's funny. I was talking about the difficulties of creating an insurance technology firm. I mentioned capacity, customers, funding, regulation. I didn't mention tech, which is another one of those dominoes you quite need to have an insurance technology company. You've built an API-driven platform that has one-click onboarding that, as you say, automates a number of claims. What does the technical infrastructure look like behind a product like that? And do you have any horror stories or watch outs for founders who are building tech for retailers?
I mean, I think for retailers, people are just so busy. So our customers really want something that is not going to involve a lot of their own development efforts required to integrate. So we're really trying to keep some APIs are very well documented. We're not asking for any more data sets than we would need. So it's really just the tracking data, the origin, destination, what's in the shipment. So we're really just trying to sort of be quite focused around that rather than just asking for a lot of data to be transferred over. And that's really the driving force behind the integration. I mean, obviously, if you're building an enterprise product, the tech does need to work. So once some of the main challenges are really around security and, scaling up, when you start dealing with, we went to sort of hundreds of thousands of shipments a week. And then, as we step up to the millions, that's going to be another, challenge in itself. That's where, we'll need to bring further resources into the team to help to manage some of those challenges. But you have to start somewhere as a startup. So, and I think our customers appreciate that we're learning. Things aren't necessarily going to be perfect at the start, and we will just be very quick in terms of iterating and addressing when things go wrong.
Sounds awesome. We're facing a lot of the same challenges in terms of credibility and enterprise. You mentioned enterprise sales cycles being 6 months, a year long. What have you learned about selling into retail that might be a little bit different than your previous experiences? And what's been the biggest challenges and what's the biggest opportunity advice you'd give for people looking to sell into enterprise retailers?
I think the main issue that you find with selling into enterprise retail, and you must find this as well, is the seasonality of it. In that, there is a certain flow of the year. There are some times of the year when it's going to be possible to essentially onboard new customers, sell things when there are tender processes happening that the product that we're selling could sort of complement. But there are several months of the year where it's not possible to sell anything. And it's really just a question of sort of delivering whatever you've got onboarded. And that's during the peak trading months in Q4. So that obviously then really dictates how the rest of the year flows. So when you're talking about sort of a 6 to 12-month sales cycle, but then you may only have sort of one cycle a year or one window of a year within which to hit that, that's definitely going to be a challenge. As you get a bit more familiar with the businesses you're working with and when the tender processes are happening, then that just becomes a bit sort of clearer over time. But it's like with any business, that you start, you just have to start somewhere.
And are those seasonalities, do those tend to be driven by sales peaks or do they tend to be driven by fiscal years or any other events?
sales peaks.
Okay.
Yeah. So I mean, in retail, there are many businesses that do 50% of their sales in the fourth quarter of the year. They're not going to be experimenting with a new technology in the middle of that phase. So we would need to really get started before or after, and then sort of build up to that.
We're saying that in our sunglass retailers, and the majority of it's in tall furniture, which is Q4, completely similar. So something to keep in mind when, in terms of timing your approach and when you pitch the project management of something new you're implementing. So you are in talks with to serve markets around the world with Anansi. Is that, you started with the UK market, but obviously with insurance, there's regulatory complexity. How are you thinking about that? And how are you thinking about making the business scalable internationally?
Yeah, that's another pillar that you should have mentioned as well with scaling an insurtech, because obviously if you're just selling a sort of a SaaS product, you can get started and you don't have to navigate all of that regulation. But it isn't as straightforward as people would imagine to go from one country to another. So we started our journey as an appointed representative. So what that means is that we are FCA authorized, but we have a license which sort of piggybacks on the license of a larger principal broker. We are actually in the process of becoming a Lloyd's cover holder, which is very exciting, where we will become an MGA, managing general agent, in our own right. But that journey will take a few months to become established. But that will then give us the basis with which to more easily enter new markets. So within Europe, it's possible to have passporting across Europe. And then in the North American market, that can also be done underneath the Lloyd's umbrella. But nonetheless, in the US, you have the 52 states to navigate both the product and also the claims process to make sure that you are compliant.
Can you just touch on, for our listeners' benefit, the benefits of being a Lloyd's cover holder and accessing that part of the insurance market in capacity versus the more general insurance market?
I am no expert in this. I mean, I would say we are, really big supporters of Lloyd's. We were part of the Lloyd's Lab accelerator program, and that really gave us, huge amount of support in terms of our business plans, finding capacity and building the relationships that, are now sort of coming to fruition. And I would say that within the Lloyd's umbrella, there is capacity available for innovation and sort of innovative products. And it also does provide some degree of infrastructure for that international expansion. It's definitely possible to do that outside of the Lloyd's market, but it really just depends on what type of product you're distributing. So if you're in the specialist insurance space, I think Lloyd's is a good option. So that's, I guess, slightly more unusual risks. I mean, Lloyd's was founded on marine insurance, and we, very much squarely fit within the marine sort of space. But there may be other, if your product is slightly different, there might be other pathways which have been trodden by the other insurers. So I think it really just depends on what you're doing, really.
Despite not being from an insurance background, you've really embedded yourself into the insurance ecosystem, right? You're working with insurtech UK as the vice chair of diversity and inclusion. How has that experience of coming into the insurance industry been for you?
It's been, a huge learning curve to come into the insurance industry from a different background. I mean, I think it's really great to see people with different backgrounds starting insurtechs or having senior roles in them to bring some new experience into the sector. I've been very fortunate to have had some really experienced insurance people around me, my board. I've got people who run some very large MGAs and been the founders of some larger insurance companies, and they've kind of helped to guide us. We've had really great compliance support over the years as we've kind of sort of started on that journey. So it takes a village to build a startup. It's not just really around one person. So there's been different people that kind of come in and gone out along the way. So that's really exciting.
It's definitely an industry that expands well beyond the sort of traditional view as insurance, as I guess a little bit of a conservative industry, maybe at times a little bit of a industry that prioritizes socialization. Certainly not been my experience, but how's that resonated with you?
I mean, I think the industry definitely does still work on human relationships. So I think that's why sometimes it does take time for things to get things off the ground, because people just want to spend some time with you, get to know you, to trust you, and then that's how you can essentially build the foundations for working together. So it is a very distinct industry to be working in the insurance industry and to be starting something new in the insurance industry. But it definitely, because the industry requires such a lot of trust and relationships between all the various parties. I understand why that might be. And it's very interesting because that's really why the Lloyd's Lab is such a unique in sort of experience, because it's not like any other accelerator program where you're just sort of trying to get to demo day. It's really much more around building relationships with your mentors, introduction to the Lloyd's markets, and how you can go about doing that. So, and that's really helps to provide that foundation for the future opportunities.
Yeah, so the Lloyd's Labs, just for background, is a insurtech specific accelerator where you get office space in the Lloyd's building, where their incredibly famous central London hub, and various support with mentorship and accelerating as you and pitching as you become a fully fledged insurtech. And what was the most valuable part of the experience for you?
I think coming back to the sort of the pillars of what you need as an insurtech, without capacity, you don't have anything. So building those relationships so that you can find a pathway to capacity is obviously a key one, but also getting a sense check around your business plan, and really, from people, because there aren't really that many completely new ideas. So it's really just getting a sense check from people that have been there, done it before in related markets or something similar, to really just think about how to go about thinking about distribution, product development.
Something we would love to explore in the future. And tell me about your use of AI. It seems pretty integral to the business and in terms of the data analysis you're doing, but how are you leveraging AI to offer hyper personalized coverage to the retailers you're working with?
Yeah, I wouldn't say it was sort of hyper personalized coverage, because we're dealing with such large schemes. So really, it's just more a question of, I mean, obviously those schemes are being priced, um, according to how the scheme is performing. I mean, I guess the areas where we're using, or we're looking to sort of leverage more AI is around the invoicing product, around elements of the claims process. So it's really around the damage, as we were mentioning before. If we're looking to try and get as much automation as possible, where can we leverage some of the data that we're gathering to, identify or preempt, for example, damage claims using image recognition and that sort of thing, and, sort of AI powered, claims assistance, just given the volumes of claims that we may be dealing with some customers, just to try and find a way of doing that in the most efficient way possible.
Awesome. So anything like that, which is a bit of a repetitive task or where the information is really available for a bot to make decisions, you're looking to automate that part of the process.
Exactly. Yeah.
Very cool. You've made some major partnership announcements like EKM, the UK's largest e-commerce platform. How do you approach strategic partnerships in reaching retailers?
Partnerships has been, real journey for us over the past few years. So I think we've definitely learned a lot about, how, how partnerships kind of thrive, how some partnerships can just kind of fall off by the wayside. And also, obviously, our product has evolved over time from I guess, a shift from, being an add-on for some of the smaller businesses who may be doing maybe a smaller number of shipments, to, I guess, more of a focus around enterprise, and where we're working with some of the larger third-party logistics partners to see how this could really support some of the businesses where the problem they're really trying to solve is reliability of cover in comparison to the courier compensation, and also the volume of claims, and how to manage that efficiently when all of the customer service teams are really very stretched. So I would say that I wouldn't say we've completely cracked partnerships. I would say that we kind of have a better sense of how to go in with partnerships, what we want the legal structures to look like. You can see what the partnership to have, in some minimum time periods now, and that we start, how we start with the number of test clients, and then we kind of scale up from there. So it's something that actually, with the work I was doing with InsurTech UK, I was quite keen to explore how as insurtechs, just because of the nature of the product, how potentially we can also share a bit more information between each other, because I think we may deal with similar issues in terms of partnering to distribute an insurance product because of the nature of the product. So I think there's a lot that we can really learn from each other in terms of how to make those partnerships a success.
Yeah, completely. And absolutely a journey we're going on as well. And yeah, our two businesses are exploring a light touch partnership as we start now. But a big part of that is we're both focused on retail, whereas other insurtechs might be focused on any other vertical, or insurance companies themselves if they're selling tech. So if we look at the selling to retail, what's the biggest thing in that journey of selling into retail that's been really surprising for you in terms of the retail landscape and the conversations you've had?
What has been surprising to us? I mean, I guess the reason for pivoting away from SME space is that I guess what we found is that self-insurance was more of an option for those businesses just because they were dealing with a smaller number of claims. And that's really what we found in terms of the sort of feedback as we were testing the early product, is that, you need to get to a certain level of scale before this type of solution that we certainly are offering was going to be more relevant to those clients. And we obviously want to sort of scale up. That makes more sense for the insurance product as well. In terms of the capacity to really be deploying enough capital to make this whole kind of scheme make sense. That's been really what we've experienced, but I don't know what you've experienced in that sense.
Um, wow. Okay. No need to think about what happens if my questions are put back to me. My biggest surprise selling into retail has been, and partially why I named the podcast this way, has been the level of detail and thought that goes into every aspect of a retailer's um, sales cycle and processes, especially really when it comes to e-commerce. I had sort of thought,
Mhm.
e-commerce secondary thought for a lot of businesses, like they might be happy to integrate a product like ours, really quickly, and the small ones have. But any enterprise retailer is going to meticulously, and even mid-sized retailers, examine every aspect of what you're doing and the changes you're making, and wanting to test things 5-6 times, and being very strict on their technical roadmap, and prioritizing what is often some very legacy tech. So both the pressure that's on retailers and the situation retailers in, and then also the level of detail they will go into about every new initiative, were both real surprises for us. Have you found that as well?
But that Well, I think that's because you sit in the checkout though, so I can really understand why that would be. That's obviously like the core decision-making process, and anything that happens at that point in the customer journey absolutely is, yeah, tested to the hilt, as it were. I would say we sit in a different position because I guess the product we're offering is aimed at reducing balance sheet losses.
Mm.
So it's much more of a financial decision, as in this is what the cost is and this is what the benefit is. So it's really much more around us to really digging deep into the numbers and what the options are in terms of how the numbers are sort of presented around the insurance. So yeah, it's a very different conversation. I think we're talking to quite different parts of the business. So we're mainly speaking to the logistics teams and the finance department, really.
And do you find that the logistics and finance team can make that decision, or do they need to go up to CEO level approval in all cases? And have you found that looping in decision makers that you don't meet right until the end of the process? How's that journey been?
It is interesting. So when we're working with some of the third party logistics partners, actually we are dealing with the chief operating officer. So we are dealing with a C-level person. And actually that is often who is actually leading the discussion, even from the early days. I think definitely something that would be this level of financing would just definitely does require sort of a high level sign off. I would say where we get stuck is more with some of the retailers, where yes, you are working maybe with the logistics teams, and then it would take, there would be a number of different steps, some of which we are not really even visible to us. So maybe don't have full oversight of who's saying what to who as part of the process. But I think you always learn something from all of these opportunities, and that you can take that from to the next time, as it were.
And are you finding that Anansi has competition, or are you just in competition with the status quo and not having a solution typically?
So I would say our main competition would be the compensation that's offered by the couriers. It's not a regulated insurance product, but obviously the couriers probably have captives or some level of insurance to, you know, underpin that to a certain extent. And then obviously, whatever is left, the retailers would be taking on their balance sheet. So I say that was be our main competition. I think obviously there are new businesses popping up, looking to support on the claim side in terms of filing claims and making that whole process a bit more efficient with the tracking data and with AI. And, that may be, I wouldn't see that as a competition though, because, obviously, I guess the core of our product is a regulated insurance product. So, we are essentially building an alternative process.
The main Anansi pitch, as I understand it, is we will pay nearly all claims, we will price this fairly, and we'll also go above and beyond to help you to ultimately lose less packages and improve your processes and overall supply chain right through the last mile over time.
Yeah, yeah, perfect. You're hired.
Get me out there in the field sometime soon. I'm slightly, but we'll. Actually, let's talk about your 5-year vision for this, and if I can fit into it, great. I do anticipate it.
I mean, our vision is really to become the category leader for shipping insurance. So we're definitely quite keen to expand internationally. Most of our clients are in the UK at the moment, but looking obviously shipping packages internationally. And with the new capacity that we have coming in, obviously the Lloyd structure, that will make it much easier for us to essentially shift with some of the global logistics partners we're working with to other markets. And, then ultimately, I think in terms of expansion, we may look to go further up the value chain to, more the middle mile shipments, and just see where there may be opportunities, if we wanted to launch any new products. But, essentially this is a huge market. I mean, sort of 70 billion of premium a year. I think, and I think that's not even including the level of underinsurance that there is. So I think we can build a decent size of business by really just doubling down on what we have, especially as we start to gather more data so that we can really price this risk as fairly as possible.
Awesome. So 70 billion of insurance linked revenue to go after and potentially more. So that's exciting. What would your advice be for entrepreneurs looking to enter a regulated industry, whether that's insurance or parts of finance?
Don't no. Go I think go very, very carefully. I mean, I think basically the thing is that you just have to really sort of I don't know, sort of put timelines to the side, because I think if you're entering a non-regulated market, things can happen quite quickly. But as you say, if you've got a four-sided marketplace where you've got product risk, you've got the whole insurance capacity journey, you've got to build the product, so you've got the sort of tech side of things, you've got to, build a team, you've got to find investment, and you've got to, find customers. And if those are enterprise customers, that's a whole other thing. So trying to do all of that at the same time as having a regulated product just makes everything that bit harder, and everything just takes a little bit longer, quite a bit longer than if you're in a non-regulated market. So, if you're prepared for that, the level of resilience and endurance that is needed for that journey, then, because I think, there are some, huge markets out there that you can grab once you've got through all of those hurdles. And obviously those barriers to entry make it, very difficult for the next person to essentially come along, because they would have to do all of that to kind of replicate what you're doing. So I would say their opportunities are definitely out there, but it's quite it can be quite a long process. I mean, obviously you can kind of look back and think, oh, I'm sure I could have done this a lot quicker with what I know now. But obviously you don't know what you didn't know, when you kind of start out as well.
Yeah, that's exactly it. It provides.
I mean, for you, it's different though, because you were from the insurance industry.
I wasn't. I come from a B2B sales background, and family
Okay,
live in Bermuda, but I haven't worked in insurance.
I see.
Yeah. So feeling that similar pain, everything does take longer. You need to fundraise more. You need to work harder, to persevere more, but then you have a nice competitive moat. And you also mentioned building the team. I didn't mention that as yet another pillar that you need to have in an insurance all at the same time. So my team are likely to kill me. And quite deservedly so. Megan, I'm just going to dive into the questions we ask everyone, and these are quite specific to retail as opposed to insurtech. And so, drawing on your time from the last straw and then also now with Anansi, what detail of retail do you like the most?
I mean, retail's just such a fundamental sector. So I think, it's you can see the tangible impact of, what you're doing. It's something that's very relatable. I mean, if you speak to anyone about the problem that, you or I are solving, and they can instantly relate to that, and, why that might be a problem. So I think that's really, really love working both in the insurance industry and in the retail industry. Two very, very different industries to be combining in one business. But yeah, really, appreciate doing something that touches people's lives, pretty much on a daily or several times a week basis.
That's really cool. And what detail of retail would you most want to change?
I mean, so are we allowed to say the obvious? What we would love to change with Anansi is that every shipment is properly insured with a 98% claim success rate, and these losses are just piling onto the balance sheets of retailers when things go wrong.
Oh, that seems like a really solid crusade. What's your most controversial prediction for the future of retail?
My most controversial prediction. It's quite a hard question, really.
Take your time.
I mean, I don't want to be too sort of on brand, but I mean, I guess the controversial prediction is that is there a future where courier compensation doesn't exist? And essentially, all you're paying for when you pay for your carriage is the carriage itself, and all of the compensation is handled independently through insurance.
So then couriers would only get paid on success, or they would?
No, couriers would still would essentially. So at the moment, how it works is you pay, I don't know, £2.30 for your shipment to go from A to B, and then within that, say 10 pence of that is for compensation. But then the issue that our customers are facing is that they may not get that sort of £25 or cost price back when something goes wrong, because they may only have a 2-week window to claim. Their claim might be disputed by so maybe in the future, all of the couriers will just decide, or not all of the couriers, but maybe this is a controversial opinion, maybe we'll just get to the point where there is no compensation. So essentially, it's not a sort of vested interest where you're paying for carriage and you're getting compensation from the same place. But essentially, when you pay that £2.20, say, that's all for the carriage. And then any degree of compensation is handled independently by a proper insurance.
Okay.
See, that's a complicated one. It took a long time to explain.
Absolutely. I have to do something.
But that's what we're doing, because what we're going to retailers and logistics partners to say is, we can replace this with the product or with the resilience platform that we're building.
Okay. So replacing the compensation for the couriers or the couriers themselves?
They're replacing the compensation element. So the couriers would still be making money from every shipment, for everything that ships, but they wouldn't within the amount of. I mean, I guess what would the analogy be? So it's like if you buy a bottle of water, but like 10 pence of that bottle is for if you drop it or something.
Mm-hmm. So you've insured.
You're getting insurance, rather, proper insurance with independent party, rather than having this sort of confusing sort of conflict of interest, where the couriers are not only doing that service of sending shipments from A to B, but if something goes wrong, you're then also having to argue with the courier, especially if potentially they were at fault, as to whether that item is or isn't valid for the compensation. Much better to come and have an argument with your independent insurance partner around that.
Yeah, particularly if you win that argument 98% of the time.
Yeah, you're more likely to win because it's a regulated product.
Yeah.
And we can't just say, no, we're not going to pay the claim because we don't want to.
So as I understand it, right now you're paying £1.10 for your water, and 15% of the time, if you drop your order, you get a new one. With Anansi, you might pay £1.10 or £1.15 or whatever makes sense for your water, but you will get a new water if you drop it 98% of the time.
Exactly.
Boom. I'm just really. um, what's your craziest story thus far from working with retailers or selling into retailers?
I think all of our crazy stories are from the insurance side of things.
All right.
I think the retailers are pretty, of the two industries they're working in, the retailers are pretty calm.
All right. We'll settle for a crazy insurance story.
Um, yeah, I don't know if any of these are for public.
The problem with regulated industries, the retailers will be able to
Exactly.
be on their crazy stories, but
Yeah.
we'll need to get a bit more careful. Megan, thank you so much for your time. Really insightful, really interesting, complex area that maybe people don't think of when they think about retail. The one that Anansi is clearly very well primed to solve.
Well, thanks so much for the invitation. It's been great speaking to you today, and really look forward to hearing more about what you're working on at Luxcover.
Thanks, Megan. Still soon. Bye.
Bye.